Good morning, good evening. How's it going, Habibitos and Habibitas, respectively, depending on wherever you are on the world. Today we got YouTube video time, and we are talking about irregular time frames. A lot of times when I'm streaming, I have a lot of people come through and they're asking me,
Biscuits, why do you use the 3 minute instead of the 5? How come you use the 51 instead of the 1 hour? How come you're using the 27 instead of the 30?
well, that's because I use irregular time frames based off of a 369 pattern. And we're going to go into why I use them, how I use them, the do's and don'ts, all that goodness. So that way you can most likely implement it into your strategy and help yourself. Remember, nothing I say on my stream or in my videos are financial advice. I'm not a registered financial advisor. Please seek a financial advisor before entering any sort of speculative asset market. But with that being said, I do have a pretty good opinion. A lot of people have listened to that opinion over the years and made some good money. One of those things that I do is to use irregular time frames. And without further ado, before we start, if you are from the biscuit box, I'd appreciate a like. If you aren't subbed already, you should definitely hit that sub button. If you aren't part of the biscuit box and you like the video, just remember the biscuit box is 100% free. Daily market updates, learning resources, notifications for when I go live or when the market does some crazy stuff. Also, up-to-date market analysis. Remember, the Discord's all about teaching people the skills so that way they could trade by themselves. If you give a man a fish, he eats for a day. But if you teach a man to fish, that man will eat for the rest of his life. So let's get into it. So in the 19th century, there was a little guy named Nicholas Tesla that used to be around. I don't know if you guys know about him. Most of us do. But this guy used to be an inventor, engineer, futurist. He created a lot of cool things. He was also the founder of our modern electric grid. So he has a lot of things behind his name despite dying penniless. But one of the things he was obsessed with is the 369 pattern slash the golden ratio. Some of you guys might know it by. He was stated famously saying, if you only knew the magnificence of the 369, then you would have the key to the universe. If we look at the 369 pattern, which is the golden ratio, it is found in the universe. Many things in the universe are measured by 369. Time can be measured by 369. And trading is no different. So let's get into the reason why we use the 369 for our irregular time frames. He also famously was in love and wanted to bang a pigeon, but that's neither here nor there. Before we get into the psychology and application of these irregular time frames, I need to give you a reminder that custom time frames are a paid feature on TradingView. Not a lot of charting companies have these irregular time frames, and TradingView does hold them behind a paywall because they are literally just that good. We will go over on why they are just that good in a little bit. But another thing you need to keep in mind is if you are not willing to pay a little bit into your success, you will not get it. I have never met a good trader who didn't have TradingView, and I usually tell people not to spend money on things when it comes to learning or trading. One of the things that I do tell people to spend money on is a paid TradingView subscription. If I only was charged for TradingView and it was just irregular time frames, I would do it just for the 9 hour alone. Remember, sometimes you have to pay a little bit for your success, and TradingView is one of those things I would pay for. A lot of you guys bristle at having to pay a couple $100s for something, but then you'll make a couple thousand on a position and be like, oh, cool, I just made a couple $1,000s, but you don't want to pay like $200, $300 for a subscription. It makes no sense to me. There is a trick to getting a pretty cheap subscription though, without having to wait for a sale. What you need to do is get yourself a trial on TradingView. They're going to give you a free month. Once that free month is over, go to cancel it. They'll offer you that subscription for 70%, whatever subscription you want. There is a little hack for that. All right, let's get into why I use irregular time frames over traditional time frames. So, I truly do believe that when it comes to trading, the market makers and the exchanges both know what time frames most people are watching. They know that when it comes to a smaller time frame, most people are watching a 5-minute, a 1-minute, a 30-minute, a 1 hour, the 4 hour for the mids, and a 12 hour and a daily. And because the market makers know that, they tend to throw a little bit more sauce at the end of these candles, and sometimes the structure looks a little bit scary. On traditional time frames, when things tend to top out, you end up getting bigger candle wicks, uneven candle bodies, dojis into reversals. But when you use these irregular 369 time frames, you end up getting a chart that looks slightly different. You're not changing anything. You're still looking at the same chart, but what you're doing is you're changing the focal lens that you're looking at. And a lot of the times using these irregular time frames, they're going to help you see a lot more equal of a rejection. Candle bodies and wicks tend to be a lot more equal. And when most people are screaming that it'll continue, you'll tend to be able to see a reversal where other people won't. So what we have to do is find a time frame close enough to that traditional time frame that undercuts it while also still being divisible by that 369 pattern. And in doing so, this seems to be the best substitution for those traditional time frames. A little disclaimer, I don't use the 1 minute ever when I trade. The 1 minute chart is for NPCs, the most NPC of NPCs. There's too much energy on a 1 minute, so I tend to not use it. But in order to look for these substitutions, I find that instead of a 5 minute, using the 3 minute is the best. It's your base 3. Instead of a 15, the 9 minute, that's 3 squared. Instead of a 30 minute, 27 minute, 3 cubed. Instead of a 1 hour, you use the 51 minute. It's divisible by 3, and it's 5 plus 1 equals 6. Instead of a 2 hour, you're going to use your 81 minute. 3 to the 4th, 8 plus 1 equals 9. Instead of a 4 hour, I find that the structure looks a little bit prettier on the 3 hour. Obviously, 181 minutes. 1 plus 8 equals 9. Your 9 hour, 154 minutes. 5 plus 4 equals 9. Your 9 hour, unironically, is probably the most goated time frame that you'll ever use in your life. Once again, I would probably just pay for TradingView if it was just the 9 hour that they were selling. Don't tell TradingView that. But after that, you can use traditional time frames. The daily is the best option for your daily, of course. 144 minutes, 1 plus 4 plus 4 equals 9. So is the numerology behind this thinking, and now we're going to get into examples why this is actually better than your traditional time frames. We are on the 5 minute chart right now. Everybody has it. Everybody uses it. Let's find a nice little area. I can show an example of tops and bottoms and what it looks like on traditional time frames / non-traditional time frames. So right here on the 5 minute, let's look at this little area right here. You see here how we have our little initial push up followed by our weak sell-off. This little doji right here in the middle, even though it's on a small time frame, that little middle candle doji is enough to get people confused or scared enough because they think it's going to start pushing up that they won't enter a position. Instead of a 5 minute, I find that the structure on a 3 minute is a lot cleaner. It's usually not that different, but it's a little cleaner. So if we go to the same area, there is no doji anymore. Weak candle that was pushed into a sell-off, then a nice little rip up. Our candle bodies are a lot higher than they were on the 5 minute, and our wicks aren't insanely lopsided. So that's what it looks like on a 3 minute. We popped up, candle closed. The next open, we didn't really push up, and we got our reversal. Let's go to the same area on the 15. A lot of people use the 15. Let's go to the same zone on the 15 and check that out. You see the same zone on the 15, how we have a wild wick up into this zone, and we candle closed and opened around 64,200. That's cool, but instead, I use the 9 minute. Let's go to the same zone on the 9 minute. You see here how the wicks are a lot less violent. We closed and opened at 64,320. Now remember, if you ever want to enter a position, you always want to enter at the end or the start of the next candle. And when you use these irregular time frames, you will get a 10 times more advantageous position than if you were not using them. Next, we have our 30 minute. Let's go to the same area on the 30 minute. And you see how in this zone, once again, same thing, low candle body, 64.2, wild wick. But if you use the 27 minute, wow. So a lot of the times when I'm trading by myself, I do not usually go lower than a 27 minute because I find that you can find the reversals on a 27 minute wonderfully if you enter at the end or the start of the next one. The 27 minutes probably one of my favorite time frames. But yeah, this is what I use instead of the 30. Now, the 51 in this zone does not look very pretty. The 1 hour kind of looks better. Sometimes, you know, the structures aren't perfect on every time frame, but I use the 81 instead of the 2 hour. And if you see here on the 81, it still follows the same all the 369 time frames opened and closed on the same level, other than the 51, but they all opened and closed on the same level. Our wicks aren't insane. If you would have entered at the end or the start of the candle, you would have virtually had zero stress compared to if you would have entered on a 2 hour time frame. Plus you would have gotten a lower entry, made less money until it started pumping up. Now keep in mind, I'm only using this area to show you how the structure looks different. I'm not saying like this is the top or the bottom. Next, I'm going to go over the mid time frames and show you how the 3 hour looks different than the 4 hour. So remember I said earlier that the 3 and the 4 hour aren't all that different. They usually really aren't. But let's go over to this zone right here at the beginning of the week. If you tried to get a long on Monday and you used the 4 hour, you would have entered in a very sticky situation, or it would have been a lot harder for you to catch this wick. Opens/closes were at 62.2. The wicks were down to 61.8. So that's like a $400 wick. Had you used the 3 hour in the same area, your wick would have been about $60, which is very manageable even on high leverage. And even this next little candle that went down wouldn't have done anything to you. You would have made great money. The stress would have been a whole lot lower if you were watching the 3 hour over the 4 hour, and it would have just looked a little bit better. Now, remember what I said, the 3 hour and the 4 hour are usually pretty close, but the 3 hour will definitely be a little bit faster than the 4 hour. And it'll just like all 369 patterns, it'll give you a lot more advantageous candle structure than if you were to use the traditional time frame. So when it comes to higher time frames, I recommend using the weekly for the weekly, using our daily for the daily. Those are traditional, but they're so large that they actually give you a good structure. But there's one time frame. Now listen here, homies, because this is some alpha. There is one time frame that stands above all. There is one time frame alone that is the honored one. There is one time frame that unironically has made me so much money over the last 2 years, and it is this 9 hour. The 9 hour time frame tends to be the best time frame to trade off. Not because of the candle structure on the 9 hour, because it's still the same thing. You get all of the benefits from the irregular time frame candle structure, less violent wicks, more respectful opens and closes of levels. Reversals are just a little bit faster than if you were watching a 12 hour, or a little bit less than confusing than if you were watching an 8 hour. But where it really shines, and this is a pretty nice side effect of irregular time frames, is that your momentum indicators will react so much better. And this is the trick to the 9 hour. If you are ever trying to figure out whether or not you need to long or short, it will be by looking at the stochastic on your 9 hour. Remember, the 9 hour is where the bounce on your swing is created. Whenever your 9 hour is overbought, you tend to start pushing down until you're oversold. Whenever your 9 hour is oversold, you tend to start pushing up until you're overbought. Whenever your 9 hour is done with being overbought, you'll push down into oversold. Sometimes it's a little bit irrational. You'll have to use some higher time frame confluence, but watching your 9 hour stochastics along with your 9 hour chart has unironically made me so much money. Waking up in the morning, if you see the 9 hours like in the middle, there's already a continued move. Maybe you wait until it reaches overbought, oversold. Right now we are at overbought. It's the weekend, so it's not a good sign that we're reaching the top of this trend on a weekend. And most likely we're going to pump up a little bit into the week. Monday sets a high, and then we're going to die because the weekly is also pretty overbought as well. But this 9 hour can get you pretty ready for reversals. It can help you take profit. It's been an absolute godsend in trading. The first thing I do when I wake up is I open up my chart to a 9 hour and I see where the stochastic and RSI are resting. If you know nothing about RSIs and stochastics, I do have a video on both. I uploaded them a while back. I will link to the videos in the description below, just in case you want to learn yourself a little bit extra knowledge. Just in summation with the 9 hour, the 9 hour stochastic with the 9 hour chart absolutely fucking goated. It is very hard to keep pushing up once you are overbought on the 9 hour, and you usually need a push down. Also, it's pretty hard to keep pushing down if you're oversold, and you're going to need a push up. The movement on a 9 hour is usually where bounces on a swing are created. Overall, you're going to see where your swing stops on a weekly, but to set up some good positions, obviously, because crypto's a bouncing ball, not a rocket ship, the 9 hours where you find your most profitable bounces in the market. So for little scalpies, I would be using the 3 minute to enter, 9 minute to take profit in and out. That seems to be the best time frames for scalps. If you are looking for an intraday trade, something that could last a little bit more than a couple hours, you're going to use the 27 minute and your 51 minute. And if you are looking for a position that could last for a couple days, you're going to find those on your 3 hour and 9 hour, using your daily and your weekly as your overall higher time frame confluence. So this was a little introduction into irregular time frames, why and how I use them. I do have a more long-winded guide on my Discord if any of this intrigued you and you'd like to know a little bit more. So if you're not part of the Discord, it's free for everybody forever. We have one of the best communities out there, daily market updates, learning resources, as well as one of the most grounded communities. All we care about is profitability without that weird incel energy that oozes from 99% of crypto discords. Remember, 99% of traders are losing traders. That 1% lives in the biscuit box. This is just a little introduction into irregular time frames. If you are interested, I highly suggest throwing them on your chart and giving them a watch for a while. You're going to be surprised how undercutting that traditional time frame into a 369 time frame will definitely give you a little bit more advantageous candle structure. And you're going to be surprised how just dividing that time frame up a little bit changes the reality of the chart that you're looking at. All right, guys, thank you for watching the video. If you liked the video, like the video. If you didn't like the video, dislike the video. I don't care. If you are looking for a place to trade for free with people who actually know what they're doing, the biscuit box will be linked at the bottom. And if you are looking for a no VPN, no KYC exchange, I do have a promotion going on until the 26th. Remember, KSEX has some of the lowest fees around, and at the end of the day, a lot of people are looking for something that's going to save them money, and you're going to save the most amount of money in fees. KSEX's fees are 0.01. The industry standard is around 0.05. So it's about 4 or 5 times cheaper than most other exchanges. At the end of the day, use whatever exchange you are comfortable with. I found some super hot fire for you guys. Right now, you could take advantage of a pretty sweet deposit bonus / trading bonus promotion. So if you haven't tried KSEX, try it out. Also, again, link will be in the description of the video. I go live every day, New York Stock Exchange, and then I go live a couple hours before the new day. So there are 2 streams every day. You can come through the stream. I'm pretty interactive. I answer most questions people have about the market. I highly believe that a lot of people need to start taking a little bit more action into their learning, because the more you learn, the better you will get. A lot of people care about being spoon-fed, and they don't care about learning the right skills in order to succeed. And when you start learning the skills in order to succeed, you'll start winning. If you look to be spoon-fed, you're not going to win. It doesn't matter. There are no shortcuts in crypto. One of the things you're going to have to do, and this is the hard thing, is you're constantly going to have to learn. There are no magic bots. There are no magic signal channels. There are no magic discords that are going to help you become more profitable other than yourself. This market is ever evolving, ever changing, and it moves so hard that none of those things can actually help you. You have to set yourself up with the right skills in order to succeed in the long run. And if you join the biscuit box, I got you, homies. All right, I'll see you guys on the next video. And I'm out. I made this whole video without wearing pants.